Hey everybody, Economic Ninja here. I hope you're doing well. As you can see behind me, I am in the crash test lab, and that is exactly what's going on. But instead of awesome cars crashing into blocks, these are world currencies right now crashing literally as we speak. Now, by the time you see this, this will be Monday morning. The markets will be open in America, but right now in Europe, we just saw the some very interesting things. I'm going to share the screen with you real quick. I'm going to talk about it, and then we're going to explain what's going on. Right now, accelerate here. Check this out. After Friday's mini budget has accelerated, and moments ago, cable flash crashed to an all-time low of 103, below the previous record set in early 1985 and just millimeters away from parity as every single stop was taken out to the downside. And you're going, Ninja, what the heck are you talking about? This is it. The pound, the British pound, just flash crashed 50 pips to a record low amid global Forex carnage as things start breaking. All right, now I want to explain something. I'm going to link that story below so that you can read about it. And really what it's going to talk about is that currencies all around the world are cratering. And let's talk about Japan right now and how very important this is to the dollar and why the dollar is actually causing it. Right now, Japan is having some very serious Forex issues, and they are starting to liquidate U.S. treasuries, okay? The problem is who's going to buy those treasuries? Right now, all around the world, currencies, the pound, the yen, the yuan, more, there's so many of them right now are falling drastically versus the US dollar. Why? Because the Federal Reserve has been saying we are going to cause market pain. We are going to start raising rates to get ahead of inflation. And the problem is there are countries all around the world with companies in those countries that have debt denominated in US dollars. Now, this is where it gets very, very serious. As the dollar or the DXY index keeps getting bigger, the dollar versus other currencies, primarily the euro, but also a basket of other currencies, keeps getting stronger and stronger against, even though they're all falling, right? Because inflation is happening in US dollar terms as well. Anywhere you go in America, gasoline is more expensive over the long term. Food is more expensive. Electricity, power, all kinds of things are more expensive than the dollar. So that means that currency is falling as well. The problem is all the other currencies are rapidly falling compared to the dollar falling, okay? Now, unlike 2008, where the U.S. Was the one through mortgage-backed securities and multiple banks and institutions falling apart like Lehman Brothers and Bear Stearns, that ripple sent a shockwave throughout the world to actually cause that crash, right? Or that Great Recession, as it was put. Now we have the opposite. Again, the dollar is doing something to the world, but what is happening is the dollar is strengthening, and there are countries that hold US debt. There are companies in those countries that hold US debt. And the problem is, as their currency is falling, they're going to have a more difficult time keeping up with the payments. Now, think about that. If they are transacting in any other currency outside of the US dollar to sell their goods or services, and they're earning, euros, or they're earning Japanese yen or Chinese yuan, right? What's happening is as the dollar starts to separate and these currencies fall in bigger and they get farther and farther away in value compared to the dollar, they need to now go and sell more goods and services to be able to pay back that debt. And that is what is really, really scary. And that is why right now, and I've been saying this for years, what we are experiencing in this next crisis is going to be a worldwide currency crisis, and actually a currency collapse. And we know that, and that is why they're putting out this new digital dollar. This is very serious stuff. Now, what's really interesting is what's happening to the price of gold and silver in other currencies, because those ones are rapidly losing value compared to the dollar, right? And I believe that you're going to start to see countries and companies in other countries not only trying to diversify outside of their currency by buying dollars, right? The problem is, I think a lot of them are going to start to buy precious metals. And we're already starting to see that in the premiums of the physical. Now, with that being said, I want to go back. Let's go back to the story real quick and highlight just one more thing. Now, it shows right here. Let's do this. The yen, who plunged, made a mockery of Thursday's multi-billion Bank of Japan intervention and is forcing Kuroda to sell even more tens of billions of dollars in US treasuries to cash into USDs, which he will then sell for yen in the process pushing up 10-year yields even higher, creating a toxic feedback loop of higher yields and even higher dollars, sending yields higher and the dollar even higher. So what they're explaining right now is as Japan starts to sell off its treasury holdings, right? We know that China has already been selling. We know that Russia has been selling for years now, right? They have been getting ready. They've seen the tea leaves, pardon the expression, but they really are seeing the writing on the wall. They've been seeing it for years, right? As a matter of fact, decade or two, because they've been buying up gold, right? They've been hedging themselves against this currency collapse. What's happening is as the Japan sells these treasuries, what happens is as there's nobody that wants to buy them, the problem is the yields on these 10-year bonds, the 10-year and the 30-year, are going to spike. And if you thought that you saw high mortgage rates now because of what the Fed's doing, wait till you see the treasuries spike, because people are going to go, I don't want to loan you money at this meager rate right now. I'd rather get a higher rate to stay up with, at least get close to the real rate of inflation. And so that is where things are going to get really scary. So as currencies collapse, and some people in America are going, ha ha, king dollar, look at you guys. You know, we're awesome. The problem is, here's this other thing. All of our companies that are trying to export goods, do you think that they're going to have a buyer on the other side? Probably not, because as other countries' currencies are failing and their companies are in jeopardy and they're trying to raise more money to stay up with their US debt, they're not going to have the money, or the citizens of these other countries are not going to have the money to buy our goods, because our currency is getting really strong. That's the other thing. On this flip side, other countries should and need to, scary to even think about this, need to raise their rates aggressively just so that their currency doesn't fall so drastically the dollar. This is absolute carnage. And if you don't understand it, I highly suggest you start to really do some research right now, because what you are seeing is akin to what happened in the summer of 2008 as the Lehman Brothers crisis was starting, and there was rumors, and there were people like Jim Cramer telling you, the heck with this, I'd buy Lehman Brothers, it's a deal. Or other gurus out there that are saying, you're nuts not to buy at these low prices, right? Because the stock market's had a 25-30% sell-off, let's say in the last 20-25% in the last since January. Think about what is going to happen when these gurus are wrong again. This is bigger than 2008. So guys, take a look at the stories. It's already happening. This next week, I think, are going to be absolute fireworks in the market when it comes to the Forex carnage. And again, remember, I told you this before, I'll say it again. I am expecting the euro to collapse. And when I mean collapse, I mean drastically lose value compared to the dollar. And the Eurozone, the ECB, the IMF will need to step in and backstop the collapse in that currency as a last-ditch effort before it finally goes kaput. And that is scary, because when that happens, when they have to step in and intervene, and the market is saying nope, and we're still selling this currency, we in the United States have about 4 to 6 weeks, because we are so tied to them. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.